More rate hikes are coming. Let's have a look. Good evening, everyone. Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's check out this article from news.com.au discussing, well, fears of more rate hikes. Brutal warning for Aussie homeowners as RBA flags the possibility of more interest rate pain. And you know what? Let me do a few things here. We'll bring up the cash rate, and you can see we're at 3.6%. And I'm going to look at the ASX rate hike predictor, and we'll see where that is sitting at right now, the rate tracker. And if we jump here, so on the 18th of April, an 81% chance of no change, and an increase to 3.85%, a 19% chance. So there you go. 3.85. We're getting there, aren't we? The rates they're slowly creeping up. So let's check out this article. Australian homeowners have been dealt a fresh blow as the Reserve Bank released the minutes from its board meeting earlier this month. So more pain for mortgage holders could be on the way after the Reserve Bank of Australia indicated the possibility of further interest rate rises. Well, they already indicated that in their previous announcement, but we'll have to see what happens. The RBA on Tuesday released the minutes of its April meeting, where it left the official cash rate, which guides interest, or the official cash rate target, that's what it is, which guides interest rates set by lenders, on hold after 10 consecutive increases. The minutes showed the central bank mulled over whether hitting the pause button or a 25 basis point rise to 3.85% was appropriate. In the end, homeowners were spared from another increase, but the RBA warned it didn't spell the end of rate hikes altogether. Members observed that it was important to be clear that monetary policy may need to be tightened at subsequent meetings, and that the purpose of pausing at this meeting was to allow time to gather more information. The decision to keep the cash rate at 3.6% in April appeared to be as a close call as the central bank flagged concern that strong population growth and wage increases could lift inflation. The case was again founded on the observation that inflation remained too high and the labour market was very tight, the minutes said. Fresh quarterly consumer price index data is set to be released later this month. In the December quarter, it jumped to 7.8% over the year, the highest since 1990s. Board members noted the forecast by the RBA, conditioned on further tightening of monetary policy, did not have inflation returning to its target rate of 2 to 3% until mid-2025. But if we look at this, when's the last time they've been on target with inflation? It would be inconsistent with the board's mandate for it to tolerate a slower return to target, the minute said. Electricity prices are forecast to increase sharply in the September quarter as the default contract prices are expected to rise by 20 to 30% in most states. These are just going to continue to get more and more expensive as we make the transition to cheap and affordable renewable energy. Just wait and see. Sadly, I think a lot of Australians need to learn stuff the hard way. I'm really getting that impression that we have to learn stuff the hard way. Just look at Germany. They shut down their nuclear plants and then instantly one region put power prices up 40%. I guess power, these luxuries like power and electricity, they're only going to be for those who can afford it. Will we see rationing of electricity? Does anyone remember the blackouts from the 80s? Anyway, if these increases flowed through to the market offers as expected, energy prices for both electricity and gas were expected to add 0.25 percentage points to headline inflation over the 23-24 financial year, the minutes said. The central bank is also concerned an upgrade in population growth projections would put significant pressure on demand, especially for housing. Although higher immigration might reduce wage pressure, members noted that the net effect of a sudden surge in population growth could be somewhat inflationary for a period. However, the board ultimately decided to hold steady to give the central bank more time to assess the impact of the most aggressive tightening of monetary policy since the 1980s. Members recognized the strength of both sets of arguments, but on balance agreed that there was a stronger case to pause at this meeting and reassess the need for further tightening at future meetings. The next meeting will be on the 2nd of May. So let's have a bit of a talk about this one. Just get this image in your head. Just think about this. You know, these decisions are made by a bunch of people sitting around a table, having that much influence over our economy. Are we in a centrally planned economy? To some degree, it feels like we are, doesn't it? We're definitely not in a completely free market economy, not by any measure. So if anyone blames my capitalism on them being a lazy, loser, correct them. Just correct them. Well, there's nothing really new, I think, in this article that we haven't seen before, but we'll have to see what happens at the next meeting minutes or the next meeting. Do you think rates will go up? Let us know in the comments below, guys. I did a, let me bring this up. There's a bit of a funny one, a poll I put as a half joke to ask the question of if we will see, if here in Australia we could see, there we go. Because it's Australia, do you think we'll see interest rate increases and a house price boom at the same time? Okay, that's the question I put to you because it's Australia, guys. 62% said yes of 1,200 votes and 38% said no. I mean, it's Australia, guys. Could see it happening. How many people will be disappointed with that? How many people will be surprised? Well, let's have a look at what some of the comments said. We'll go to how we sort by top comments. Affordability has to be a reflection at some point, surely. I'm noticing a significant drop in work as of November last year. Depends where you are. It depends where you are. Really, honestly, and what work you're in. Because different tradies are flat out. The longer we don't have a housing correction, the bigger the bust will be. I mean, we're only assuming this is a bubble because we're comparing it to historical precedent. The huge Victorian housing crash, a century ago, but it was a completely different world. That data, I don't think, is even relevant anymore. And we're a country with 3 cities, a colony on the edge of the world that needs specialist skills from everywhere all over the world that keep coming here. We're a quarry, we're an international English school. Are we even a real country, guys? So will it work? Are the precedent we're looking at relevant to Australia? Minimalism, the genuine philosophy, not the social media fad, is a lifestyle that could help more than a few. True, bit off topic, but yes. I wanted to buy my first house when interest rates are at 10% and the average house price is $2 million. I'm waiting to buy. Oh, shit. Yeah, that might be true. And Herbert saying this place is going bonkers. Not what it once was. Take me back to the 80s. So, guys, you can see, well, let's just say a bit of skepticism in the viewers about what the future entails. Anyway, thanks for watching. Let me know your thoughts and opinions on this one. If you're a fan of the channel... am I pressing the wrong button? There we go. If you're a fan of the channel, check out Heise BIM and Heise Does. And if you want to support us, you can on YouTube or Patreon, using our referral links, buying our pocket squares, or calling us if you need an architect. Take care, guys. Have a great day. I'll see you next time. Bye for now.